Welcome to Ezikan Academy YouTube channel. In this lecture, I want to examine basis of assessment, commencement principles. If you are coming across my lecture for the first time, thank you for stopping by. To my returning subscriber, I say thank you for being part of this channel. Commencement principles. So, basis period. Basis period or basis of assessment. Basis period or basis of assessment. This is the basis upon which the tax liability of the business will be computed. Basis period is the basis upon which the tax liability of the business will be computed. The basis upon which the tax liabilities of the business will be computed. That is the basis for computing the income tax payables of a business. That basis is said to be the basis period. Types of basis period. Types of basis period. Types of basis period. Basically, we have two types of basis period. We have one, normal basis period, normal basis period. Then we equally have abnormal basis period. Abnormal basis period. We have two types of basis period. We have the normal basis period and abnormal basis period. So, normal basis period. Normal basis period. A normal basis period is the basis period with the following features. Basis period with the following features are said to be normal. Number one, it must be exactly 12 months. A normal basis period must be exactly 12 months. A normal basis period must have exactly 12 months. It cannot be more nor less than 12 months. Two, there must be one permanent year end. You must have one permanent year end. There must be one permanent year end. So what that means is that if the year end is June of every year, so in that basis period, the year end throughout will be June. You can't have June in one of the periods and December in another. No, everything must be 1 year end. Three, it must commence where the earlier basis period end. In normal basis period, it must commence where the earlier basis period end. Normal basis period we always commence where the earlier basis period end. So any basis period other than normal are said to be an abnormal basis period. Abnormal basis period. Any basis period that does not meet the conditions specified for the normal basis period, those basis period are said to be abnormal. That is, it may not be exactly 12 months. An abnormal basis period may not necessarily be 12 months. And you can have more than 1 year end. You know, on changing accounting date, you may have June and you may have December. That is abnormal. So number three, so it may not always start from where the earlier basis period ends. That is, those are the conditions for an abnormal basis period. And we can have an abnormal basis period on commencement of a new business. No, when a new business starts, you may not necessarily have up to 12 years 12 months rather, in the year of the commencement. In the year of commencement, you may not necessarily have up to 12 months. So that is abnormal because it's not exactly 12 months. In the year of commencement, that means you may have an abnormal basis period. Then you may also have an abnormal basis period in changes in accounting date. In a change in accounting date, of course, you might even have, you may not necessarily have one permanent year end. One year end might be June, and the business might change from June to September or to December or any other date. That means that does not meet the condition of a normal basis period. So you may not necessarily have 12 months. Of course, during change in accounting date, the entity might prepare an account for maybe 15 months, 18 months, 20 months or so. So that deviates from what is said to be normal. So that is abnormal. So then the third one, the third situation that you may have an abnormal basis period is on cessation of business. If a business ceased on June, that means in the year of cessation, you may not necessarily have 12 months. So that is abnormal. So any basis period that does not meet the conditions specified for normal are said to be an abnormal basis period. Now, I've told you that you may have an abnormal basis period on commencement of new business. You may also have it on change in accounting date, and you may equally have that on cessation of trade or business. Now, I want to explain the other terms you are expected to know on commencement of a new business based on the provisions of the Finance Act. We want to explain the commencement principles based on 2019, 2020, 2021, 2022, and 2023 Finance Act. So now, before I go into commencement principles, I want to explain other terms you are expected to know on commencement or commencements of a new business. So other terms, let me say definition of terms. Number one term is preceding year basis. Preceding year basis. PYB. Preceding year basis. This is the basis period that ended before the year of assessment. The basis period which ended before the year of assessment in question, that basis period is said to be preceding year basis. So in line with preceding year, if the year of assessment, if it is 2021, so the basis period, provided the year end, if the year end of the business is December 31st, that means the basis period on the basis of PYB will be 1st of January 2020 to 31st of December 2020. So the year end is assumed to be December here. So now, before you enter 2021, since the year of assessment is 2021, before entry 2021, the PYB rule must fall within 2020. So, and if the year end, the assumption here is year end is December 31st. But if the year end is June, so year of assessment, 2022, the basis period will be 1st of July to 30th of June the preceding year to 2022 will be 2021. That means you end it in June 2021. That means you start from, if you want to have exactly 12 months, you must have started from July 2020. The preceding year to 2022 will end in 2021. That is why we ended it on 30th of June 2021. Then for you to have 2020 exactly 12 months, That means you will have started from 2020. So if you count from 1st of July 2020 to June 30, 2021, you have July, August, September, October, November, December. That is the end of 2020, which is 6 months counted in 2020. Then you have 2021, January, February, March, April, May, June. Then by June 30 of 2021, you'll be having exactly 12 months. 6 months in the year 2020 and 6 months in the year 2021, making exactly 12 months. So the basis period now is PYB rule. The year preceded the year of assessment, which is 2022, is 2021. So this is on the assumption that the year end of the business is June 30 of the year. That is when you'll be having the basis period this way. But if the year end is December 31st, then the basis period will be like this. That is on the basis of PYB. And the preceding year basis PYB rule is the core principle in finance art. Number 2, we have actual year basis. Actual year basis. AYB. Actual year basis. Actual year basis is the basis period that runs from the 1st of January to December 31st of the same year. Actual year basis runs from the first day, the 1st January, and ended on December 31st of the same year, not on PYB. Same year, but that same year must span from January 1st to December 31st. So what that means is, if on the basis of actual year basis, 2021 year of assessment, if the year of assessment is 2021, the basis period for this year will run from 1st of January 2021 to December 31st of 2021. So this is actual year basis. Now, we want to explain the commencement rule based on the 2019 Finance Act. Finance Act 2019. Finance Act 2019. So you have to note this in connection with 2019 Finance Act. 1. Effective date. Effective date. That is, when this Finance Act became effective, it means if the year of assessment comes before year 2020, the old rule will still be applicable. Therefore, effective date of 2019 Finance Act is 2020, year of assessment. 2020, year of assessment. It means before the new rule can be applied, before the new commencement principle can be applied, the year of assessment has to be from either 2020, it has to fall within 2020, 2021, 2022, 2023, 2024, 2025, we are in year 2025. That same rule is still applicable in the year 2025. So we still believe this 2019 Finance Act rule will still be applicable in the future year. So till when a new tax rule might change it. But for now, effective year 2020, effective 2020 year of assessment, the new rule will be applicable. Effective 2020 year of assessment, the new tax rules will be used. That is, the new tax commencement principle will be used effective 2020 year of assessment. It means if the year of assessment is 2017, 2014, 2015, 2016, 2017, 2018, 2019, old rule will be applicable. If commencement rules falls between 2015 to 2019 year of assessment, any years before 2019, you are expected to apply the old principle, not the new principle. But ICAN is migrating fully to Finance Act. They are migrating fully to the new principle. That is why in this video, I won't say anything about the old rule other than what I have said. Now, this new rule became effective with effect from 2020 year of assessment. Please take note of that. Number two, we have the core principle. Core principle. The major principle, the principles used in the new rule now, everything must be preceding year basis. Preceding year basis. The new commencement rule, everything you are going to do here must be on PYB, preceding year basis. Commencement rules. So we want to explain the principles, the new rules now. So on the basis of that is the new rule that is applicable to the new business. Following section 29, subsection 3, section 29, subsection 3 of CITA as amended. CITA means Company Income Tax Act. As amended, the assessable profit of a new business shall be determined as follows. If you want to determine the assessable profit of a new business, you have to follow the principle I'm about to state. Now, the first principle is called first year of assessment. For the first year of assessment, the assessable profits shall be the profit from the date in which it commenced to carry on such trade or business in Nigeria to the end of its first accounting period. The assessable profits shall be the profits from the first date, from the first date. You have to know this principle by heart. From the first date in which it commenced, to carrying on, such trade or business in Nigeria, such trade or business in Nigeria to the end of its first accounting period. To the end of its first accounting period. Please, end of the first accounting period. We didn't say to 31st December. This is different from the old rule. First accounting period may end in June 30. It might end in September 30. It might end on November 31st. So it might end on 31st of March and it may end on December 31st. End of the first accounting period is what we say, not to December 31st. So the assessable profits shall be the profits from the first date in which it commenced to carry on such trade or business in Nigeria to the end of its first accounting period. That is the rule governing the first year of assessment, that is for a new trade or business. Then second year of assessment. Second year of assessment. Second year of assessment, that is the second year of that new trade or business. The assessable profits shall be the profits from the first day after its first accounting period. The assessable profits shall be the profits shall be the profits shall be the profits from the first day, from the first day after its first accounting period to the end of its second accounting period. So, second year of assessment, the assessable profit shall be the profits from the first day after its first accounting period to the end of the second accounting period. To the end of the second accounting period. That is the second year of assessment. Then the rule number 3, which is applicable to the third year, and for each subsequent years. This rule number 3 is applicable to the third year of assessment and other subsequent year. The assessable profits shall be the profits from the day after the accounting period just ended. The assessable profits shall be the profit from the day after the accounting period just ended. Example 1. XYZ Limited commenced business on March 1st, 2020 and makes up accounts to October 31st each year required. State the relevant assessment year and the profits to be assessed. The question is obtained from ICAN study test. Now let's have the solution to that. Solution to example 1. The name of the entity is XYZ Limited. Now the first thing is to identify the year of assessment. What year would XYZ Limited first be assessed? Remember, I've told you that the core principle of Finance Act is PYB, Preceding Year Basis. Now, if the first year of this new business is year 2020, therefore, the first year of assessment of the business will be 2021 on the basis of PYB. Therefore, we have year 2021. That is the first year of assessment. After the year of assessment, then we have the basis period. Basis period. You can apply the rule governing the first year. Remember, we said that the first year of assessment, the assessable profits shall be the profits from the date in which it commenced to carry on such trade. Now, the question is, what date does this business commence? It commenced on 1st of March 2020. That means the basis period will start from 1st of March year 2020. True. Now, go back to that rule for the first year. The assessable profit shall be the profit for the date in which it commenced to carry on such trade or business which has been identified. Date it commenced to carry on such trade or business in Nigeria to the end of its first accounting period. The first accounting period, when will it end? And makes up accounts to October 31st each year. That means the first accounting period will end on October 31st. So you have 31st of October that year 2020. So that is the basis period for the first year. And the profit, say the relevant year of assessment. The relevant year of assessment is year 2021. And the profit to be assessed. The profit to be assessed should be the profit from 1st of March 2020 to 31st of October 2020. You can see that this basis period is abnormal. It is abnormal because that basis period is not up to 12 months. I've told you that you can have an abnormal basis period on commencement of business, cessation, and change in accounting date. If you count this period, March, April, May, June, July, August, October. From March to October 2020, that is 7 months. So the basis period is a period of 12 months. That is the solution to example 1. Now let's have the example 2. Example 2, which is ABC Limited. This question is also obtained from ICAN study test. Though in ICAN study test it is written SYZ. But since I have SYZ Limited in the first one, I don't want to have the same name. That's why I changed it to ABC Limited. ABC Limited commenced business on April 1st, 2020. So the first day, the first year of assessment will be 2021 on PYB. So the year of assessment 2021. That will be the first year. It commenced business on April 1st, 2020. So that means the basis period will be basis period now. Basis period 1st of April 2022. And makes up accounts to November 30 each year. That means we'll be having it to 30th of November year 2020. That is the year end of the business. Makes up account to November 30 each year. Require determine the basis period for the first 4 years of assessment. The first year of assessment have been established. The second year, which is 2020 rule, 2022, you apply the rule for the second year of assessment. The rule is assessable profit shall be the profit from the first day after its first accounting period. Note the first accounting period ended on November 30, 2020. The first day after that November 30 will be, after November, we have December. That means the first day will be 1st of December 2020. The first day after its first accounting period to the end of the second accounting period. Since accounting period normally ends in November, to the end of the second accounting period, which is 30th of November 2021, PYB. So that is the basis period to 2022. It's still 2021 preceding year basis. Now the third year of assessment, which is 2023. Remember, you are to determine the basis period for the first 4 years of assessment. And you apply the rule governing the third year of assessment. Remember the rule, the third year of assessment, we said the assessable profit shall be the profit from the first day after the accounting period just ended. First day after the accounting period just ended. The accounting period just ended is 30th of November 2021. The first day after that date will be 1st of December 2021. So that means to the end of the next accounting period, which will end as at 30th of November 2022, which is still the preceding year of 2023. And the 2024, the same rule. That is why we said third year and subsequent years. For each subsequent years. For 2024, the first day after this accounting period will be 1st of December 2022. That is the first day to 30th of November 2023. That is the solution to example 2. So we want to take the third worked example. The name is Olba Limited. Olba Limited. We were told Olba Limited commenced business on 1st of April 2020. So we have the first year will be 2021 if you want to follow the PYB rule. As a dealer in building materials, given the following results, you are required to determine the basis of assessment and tax payable and basis of assessing the taxpayers in the relevant assessment year. So, determination or computation of basis for assessing the taxpayers, the taxpayers for they say for relevant years of assessment, but you have to state the year of assessment. If you put the relevant years of assessment for relevant years of assessment, you'll be mad wrong. So, but let me leave a space. I will fill that. So now we have year of assessment, then basis period. Basis period, then we'll be having assessable profits. So please don't forget to fill up this place I left behind. If you do it the way I'm doing it in exams, you must fill that space. The first year of assessment will be 2021. Remember the core principle of the Finance Act, 2019 Finance Act is PYB. And I've told you the effective date is 2020 year of assessment. So this will be assessed in 2021. So we had 2021 year of assessment. Now, Olba Limited commenced business on 1st of April 2020 as a dealer in building materials. Given the following results, you are required to determine the basis of assessing the taxpayers in relevant assessment year. First, from 1st of April 2020, which is the date of commencement, to October 31st of October 2020, you have the profit of 350,000. Then you have year ended 31st of October 2021, profit of 730,000. By year ended, that means immediately after this date to the next 12 months. This profit is profit from 1st of November. Since this one ended as at October 31st, the first day after October 31st will be November 1st, 2020 to October 31st, 2021. You have 730,000. This profit will be the profit from the 1st of October 2021 to 31st of it will be probably from 1st of November 2021 to 31st of October 2022, which is also 12 months, 640,000. Year ended 31st of October 2023. It means this profit is profit from 1st of November 2022 to October 31st, 2023, 800,000. So the first year of assessment, as I've said, in line with PYB, so will be 2020, and the basis period will be from the date first day from the date of commencement, 1st of April 2020 to 31st of October 2020, and that profit amounted to 350,000. We said this basis period is abnormal because it is not up to 12 months. So if you count the number of months, April, May, June, July, August, September, October, that is also 7 months. Then we have year ended. This is 2021. Then the year that follows is 2022. The basis period after October will be having 1st of November 2020 to 31st of October 2021. And that is this profit, 730,000. 730,000. Then 2022 2023. After October 31st, 2021, you have 1st of November 2021 to 31st of October 2022, and the profit is given to be 640,000. So 640,000. Then 2024 year of assessment. Then after October 2022, you have 1st of November 2022. It will end in 31st of October 2023. And that profit amounted to 800,000. So if you, determination of basis period for assessing the taxpayer and the assessable profit and the assessable profit for 2021, 2022, 2023, and 2024, and 2024 years of assessment. So you have to write the title in full. The year of assessment have to be indicated. So if you look at this basis period, it does not overlap. If it were the old rule, we used to have overlapping. So none of the years are repeated. This basis period is not part of this. That is what we mean by it. It doesn't overlap, doesn't coincide. No coincidental period, no overlapping. So there is no overlapping. Then the era of computing it using normal basis and taxpayers options have been removed. We don't need to have taxpayers option under the new rule. So if it were the old rule, we used to assess the second year and third year on actual year basis. All those principles or rules have been removed. All those rules have been removed from Finance Act. No overlapping, no taxpayers option. This marked the end of the solution to the question. In my next video, I will solve questions involving commencement of business and changes in accounting date. Please drop the love emoji, like the video, and share it with others. Thanks for watching Ezikan.